Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. DRSTOXX, your one-stop shop for all things stocks. We've been in business every market day since October of 2002, if you can believe it. 23 years and still going strong. We've got two daily and one weekly market letter. The momentum letter, the weekly one, is our most profitable service, but it's a kind of a wild ride, I have to say. And then we've got two live trading rooms. This is coming to you today from the live trading room. The first one, we launched that back in 2019. And then just this last year, we're coming up on our 1-year anniversary, the live options room. And if you go to drstoxx.com, that's drstoxx.com, and click on the subscribe menu, you scroll down, you can join me and a big group of amazing people trading at all levels of skill, from beginners to people who do it for a living and everybody in between. And you can join the live options room and add that on for a 40% discount if you do both together. All right, guys, that's all I want to say about that. So we've got an interesting little market blip going on here. It was a very bearish day yesterday. We scrambled a bit in the live trading room and options room to put on some bearish exposure, which we did. That is, paid off a bit yesterday because we were a little bit late getting into those, but still paid off a bit, and we're pretty much holding at the levels where we bought them for the most part. I think one is a bit down. And then we added some more exposure as well to some of our metal trades. The mantra for me has been metals, miners, and memory. And we've got all three. We've got silver, we've got copper miners, we've got silver miners, we've got, what else do we have? Platinum. We've got both platinum miners and platinum metal in both trading rooms, both in shares and in calls. So we've got that base pretty well covered. And then the memory space, we've got that covered. We've got MU Micron calls in the options room. We've got Seagate Technology calls in the live trading room. Both of those guys are doing really well this week, even though the market's not that happy. We're getting a little bit of a bounce back today, but I think this is what we might call a backside bounce, or a gap filling bounce off of yesterday's big red stick, which broke through a whole bunch of support lines. And that kind of technical damage doesn't usually go away overnight. So yeah, sometimes the market can break those technicals, and then it rises right back up again and gets above the trend line. That's called a bear trap, and it does happen. You can see it happened that day right there, and it happened on that big red stick right there, and it happened on that red stick right there, and that one right there, and this is another one. Are we going to jump back up again and hit new all-time highs? I'm not so sure. My map has been, well, I've been expecting a decent bounce in the QQQ, especially to a lesser extent the S&P 500 this week and into the end of the month as kind of a last gasp of the bulls. And then February was supposed to be in my map a bearish month, modestly bearish month. Nothing's going to be too extreme. And then March we get back on track. Now, with all kinds of stuff going on in the background, we've got Trump, his speech this morning, which the market didn't really like a whole lot. We've got, Greenland and NATO and EU and tariffs and China, all that kind of ramping up. And then we've got this big dump of data tomorrow, which is all hugely important. We've got GDP, PCE prices, which I think is the biggie. And the market really wants the Fed to be dovish and ready to cut. And I don't think we're going to get that tomorrow. I think the numbers probably come in line, but this is a 2-month data set. And if it's in line, and we're still at 2.8% for PCE prices, which is probably where we are, I don't think the market's going to be too happy with that. I think they want to see something colder so that really pushes the Fed much closer to another rate cut. But right now, we're not set to have any rate cuts until Powell gets out of office and someone else comes in, and then it's June, right? So, okay, anyway, enough about that. Let's just talk to the technicals of the chart. Here is the support line. So we're just looking at an intermediate or near-term trend. We're not looking at anything major long-term. We could go down to the weekly chart and determine that. We could drill down to the 1-hour chart and look at the real tight intraday trend, but this is kind of the major one that I'm playing off of right now. And this is the S&P 500, and it nicely touched, right? This is the big, what was that? What happened there that caused in late November that big crash? Must have been a tariff thing of some kind. Oh, and we also have earnings coming up. All the big guys report earnings starting next week on into the end or the middle of February. So we've got like 3 or 4 weeks of some big earnings coming out that will really be determinative. And I have a feeling that the Mag 7, like we saw with Netflix last night, Mag 7 is not going to be that great. They're not going to rescue the market. We probably will even see a leg lower in NVIDIA. A&D is off to the races. We hit 110% winner in the options room this morning when AMD hit our target. And it's a little bit lower than that now, but man, it's doing great. Intel is doing great, but Qualcomm is not, and Avgo is not, and NVIDIA is not. I don't have any explanation for why the semiconductor chip space is so divided, but I suspect that it has to do with some regulations and bills going on in our Congress, and B, some cutbacks or some regulations going on in China. So I'm not up to speed on all the details of that. I'm just kind of following the headlines, and that's all I'm seeing so far. All right, so we're well off the highs of the day. We got about 2/3 of the way up the big red stick. Remember, you don't want to short a big red stick, and you don't want to buy a big green stick, because very, very likely you're going to get a much better price the next day, and that this proves my rule very easily. Now, the question is whether the bottom is in for this little pullback, and it's like a 4 or 5 day pullback. It's not insignificant, or whether we do more downside tomorrow, and that can't be determined until PCE prices tomorrow. Now, if we just look at volume, it's not good, right? It's leaning bearish, and I've been saying this now for a couple of weeks that we're really setting up here because the market's getting a little sluggish, and the upside is not as strong, and the volume going up is weak, and the volume coming down is strong, and that's usually the sign that we're ready for a decent pullback. So again, my map, it's nothing major, nothing, don't get too worried, but we have this little ABC pullback. Maybe we get something nice tomorrow, and we get a soft CPE, we get a little bit of a bounce back up into the 21, but then I think we're still on track for a fairly weak February. And I think earnings are going to be a big part of that. The Mag 7 will be a big part of that. And we'll still see metals and miners doing well in February. I do think gold has a pullback in store. I think silver is probably going to go flat for a week or two. And we get a little bit of rotation. But man, you've got to be in both those and copper and platinum for the next 3 or 4, 5, 6, 7, 8 months if you really want to outperform and get some good alpha. All right, so this is my map, right? A little ABC pullback, a little bit of a bounce out of the pink zone, off the 50-period moving average into the 21. This is my hopeful map. And then we roll back over and we see something kind of weakish in February. Then I think March is going to be decent and really quite good. So usually the third month of the first quarter generally of all the 4 quarters tends to be fairly weak. And especially after a strong year like we had. So we can expect, even volatility just on a seasonal basis. And that's especially true in the midterm year of the presidential cycle, which is what we're in. And there's going to be a lot of concern and ringing going into the midterms. But then, the most bullish 5 months of the presidential cycle are the 5 months after the midterm elections. So I think the year is going to end really well. We'll probably be up near or close to all-time highs. Maybe we get a 4 or 5 or 6% overall return for the S&P 500. It's an underperforming year. They usually are, especially after a good, strong year. But that should set us up for a very nice 2027. But heck, as I say all the time, we only trade one day at a time. We're not looking at the long term. All right, so you know where I'm at on that. It's pretty much the same story for the S&P. Here is, let me fix this a little bit better. We can do this intraday down there, and then we capture a few more of the pivot points. That is your supporting trend line for the short-term near trend, and that cracked yesterday very badly, really nasty crack. I mean, that kind of technical damage doesn't usually heal itself overnight without some kind of catalyst that the market wasn't expecting, and that could come tomorrow. Okay, so again, just like the S&P, big up early in the day, and then Trump started speaking, and then it started falling off. We are off the lows. That's a good sign. But look at this bearish volume coming in. Big distribution days here, and yeah, I don't know. I mean, we're short the tech sector. We're short the small caps. Here's the small cap index. Now this is just an overbought reaction on the market. That was that big day right there. And if we were to drill down into the hourly chart, we would see that this supporting trend line was the one that broke horribly yesterday, and it got tagged again today, and then it came back down off of those highs. Now we do have a tight stop on this one. We're talking about puts over in the options room. We have a tight stop on those. All it has to do is get above the most recent all-time highs, and then we're out. Small loss, not a biggie. But I do think that after yesterday's big distribution day, that it has a pretty good chance of at least coming back down into the 21 or somewhere between the 21 and the 50. And if I'm wrong, we're out. All right. Well, I've been bearish on Bitcoin since early November. That red bar right there, I was expecting a 75K hit. We got down to 80 on that bar right there on the intraday basis. Then it made a weak bounce. It looked like it was going to go back down again. Another weak bounce. Higher low, that looked bullish. Breakout of the range highs, that was bullish. And I'm on StockTwits and Twitter saying, all right, I'm going to change my bearish thesis now on Bitcoin because of these bullish things going on. It's not a buy yet. We need it to prove itself, but we're not shorting it anymore. We're getting out of the shorting Bitcoin business. And then it totally reversed on me yesterday along with everything else, and it's even lower still today. Here's my thing about Bitcoin. I think that this selling pressure has a little bit more to go, a little bit more to work out, but I really don't think we're going to get down to 85. If we do, it should bounce from there. And a good buying opportunity is coming back in. Both Bitcoin and Ether. Ether, I thought would, if it really got bad, it would get down to about 1,500 or worse. I don't think it's going to, frankly. I think that was too pessimistic. And it's doing the same kind of bullish stuff that we've seen. It's just that yesterday everything was down, and today Bitcoin and Ether are down again. So it still has a little bit of more discounting to do with the risks that are out there, I guess. I'm not a Bitcoin expert. I'm just really looking at the charts and reading the headlines. That's really all I do. I follow some guys on Twitter that trade Bitcoin all the time, and they still seem to be uber bullish, right? So I'm not in that camp at all. I just want to have a good trade, and I think a good bullish trade is coming up. I wouldn't short it anymore. If you're still short, yeah, just keep moving down your stop. We've got some BITI on. I do anyway. We've got ETHD. Those are remnant trades from a couple of trades earlier in the room. And I'm just going to hang on to those until it hits my trailing stop. I've got the stop protecting some profits already. Okay, so gold is up very nicely today. It was up really big overnight after a big green breakout stick yesterday. I can't really pinpoint exactly why I think it's going to cool off, but I do think that silver for the next 3 or 4 weeks should be the better trade, and then both of them get back on track probably mid-February or so for a really nice spring boom in the shiny metals. That's my map, but as I said, we don't trade the map. We trade what the market is doing each day, and when the market gives us an opportunity, we go with it. We set our stops, we set our target price, and we monitor it day to day throughout the day. And we're always flexing. We're never tied to a particular thesis, but it is important to have a thesis going into the trade so you have some conviction about it. Otherwise, I always like to tell my clients when I'm training them, you're going to have at least 3 reasons why you're buying that stock. What are they? If they can't give me 3 reasons, I say, you need to find something else, right? And then, because those 3 reasons could disappear in a couple of days. And then if you're just stuck with a trade that you have no confidence in anymore, yeah, that's not a good place to be. All right, silver, gold, Bitcoin, Ether, we did all of that. Let me just show you a couple of other charts. So I did buy some KRE. I used the leverage version of the regional bank fund. It's a DPST, and it's just kind of kept going up. I bought this during the break while I'm fiddling around with my charts. I just saw this little breakout. It was around, I guess the KRE was still under 69, and now it's a buck higher. So big green stick rule here applies. I wouldn't necessarily buy it, but there are 2 exceptions to the big green stick rule. One is that if it's a big green stick at the bottom of a downtrend, although here's one that didn't work out, but if it's a big green stick at the bottom of a downtrend, okay, yeah, I'm not going to kick you in the pants for that. And if it's a big green stick at on first breakout day, which is today, again, I'm not going to kick you in the pants, but just be aware that if you bought DPST at current price, well, it's way up there, 125.50. Yeah, I bought it down here. It was around 118. So if it's up at 125.50, just be aware that you've got to keep a pretty wide stop. This could come back to 116, 115, test some intraday support lows before it goes right back up again. And that can happen on an intraday basis, right? So it comes down and flushes out all the stops and the weak hands, and then is right back up again to close near the high. And that happens quite a bit. So just be aware of that. But this is a good-looking breakout play, and the big banks are struggling a bit. You've got things going on in the currency valuation. You've got Japan. You've got EU claiming that American credit is no good. It's negotiating tactics, I'm sure. But Japan is having a real crisis in their credit rating and their debt, their ability to sell their debt. Not very good. They're lowering the value of the yen, and that's kicking people out of a lot of leveraged trades. So Japan's part of the problem, and then we've got credit card problems, and I'm not sure what else is going on, but the big banks are kind of like a no-go zone, and they were really weak yesterday, but the regionals are just off to the races. And this is a nice looking, even an inverted head and shoulders, or it's not a continuation, but it's certainly a cup and handle. And for the DPST, I think I worked out that 75, let's call it 75 to 115, is a 30-point spread. You add 30 points to 115, and you get 145 as your target. So it's about halfway there already. All right, so that was one. Now let me show you real quick a handful of stocks on my greens list. And I think I might even need. Yeah, I'm sorry, I can show you some of these. The problem is I have an office upstairs with my 4 huge monitors, and then I have a laptop with 2 big monitors downstairs. And I kind of go back and forth between them, and then I update the charts down there, and they're not updated up here, and that's what happened here during the break. Anyway, let me show you some of these, because I do know that some of these are good. We are in COGT, nice looking ABC pullback. It's just riding the 50 and the 21 higher, and it's doing really well. And it was up yesterday. Market was way down yesterday. That's a very good sign for this biotech stock. We're in this one in the live trading room. IWM is no longer a long. That one is no longer a long. I just added this one, SMTC. It's a chip play in the fabless segment, which means it's alongside Qualcomm and Avgo and NVIDIA, but they're all down, and this one's up. So that's good, and it's just a nice, strong, trending stock, right? The lows are getting higher, and then it's really consolidating under what I assume to be all-time highs. The fundamentals are good. It's a great space to be in. I like this stock a lot. We're already long VRT calls, and it's right on the verge of big breakout. EXEL, we're long shares of this in the live trading room, and it was a little bit squirrely yesterday, but it didn't get us stopped out, and it's right back up above our entry today. I like this NTRA. This is a med tech play. They do diagnostic stuff. It's like in the Quest diagnostic space. Illumina space. And yeah, big green stick yesterday off of the 50, off the gap down. When a stock gaps down, by the way, and then rides the wave all the way back up and closes on the high, and then follows through on the next day doing the same thing, that's a good looking push. We call that a pocket pivot. The only problem is that I don't think we quite got the volume signal there, and recent volume off the top was a little bit scary. This is what you really want to see, right? You want to see these big green sticks when the price gets a little low or it gets down to support. And we're not getting that just yet. So it could be a little bit of a sluggish trade. Anyway, I'm not in it. I just wanted to see it. Real, this looks very good, right? You've got just nice, tight, soft, little pull back to the 21, back up again, back to the 21, back up again. This one looks good. And AMD is the one that is still a good hold. I don't think it's going to get up above the 260 line there, however. So it's getting pretty close. It's not a new trade, but if you're already long, you can just hold those shares. LABU looked really good. Yeah, it looks really good. The only thing I don't like is that the cycles are all in the right place. It's getting a little bit overbought. But fresh MACD buy signal and the volume balance has been kind of, I would have to say, mixed, but lately more bullish than bearish. So, yeah, if you want to buy LABU, go ahead. We got stopped out of it yesterday. I had the stop too tight when it went all the way down below the 50, right? We had our stop just below the 50. We got stopped out near the lows of the day and then just watched it sail higher. That happens. But I tell you what, much better than trading without stops. Okay, real quick look at our short candidates. Let's sort these strongest to weakest. So I'll tell you what I'm looking for with short candidates. Now, I'm not always looking for a downtrending stock. Some of the best short movements happen off of all-time highs or new 40-day highs or so on. But there you have to be careful because stocks will often, break out and get above a range high, and then they'll come back in to kind of suck in some shorts, I guess, and then right back up again. So it's like the breakout, retest, breakout. So you don't want to get trapped in that. The only way to play an uptrending stock like this one right here, this is not set up just yet. You draw a trend line underneath those lows, and when you get a close below that line, then it can be shortable. But I would go down and check the volume balance. I would look at my indicators. This is starting to get bearish, right? This big black long-term cycle is topped out and starting to fall, and the shorter-term cycles are already falling. And got a MACD bearish signal. You've got a stochastic bearish signal. So technically, this looks like it's ready to go, but price-wise, not yet. SMCI. So this is a downtrending stock with a little bit of a relief rally up into 50-period moving average, and it's gotten stalled right there. It's not a short just yet. The volume balance on that upside is pretty strong. That's a red flag if you're going short. And the cycles are down here off the bottom, rolling higher. But I just wanted to show you, this is the kind of trade that I prefer to take when I'm looking for shorts. Downtrending stock. The stock is clearly out of favor with the market, keeps going lower, keeps sitting newer lows, whether it's a 52-week low or just a 3-month low, it doesn't matter. And then a weak rally up into some kind of resistance. It can be a trend line, it can be a 21 EMA, it can be the midline of the LRC, a 50-period moving average. That's perfect. This one's perfect right here. Very weak, very low volume. This is your average volume, that blue line, and we're well below that. And then it breaks down, and on that first breakdown day was when you would go short, and you could have ridden that from like 33.60 all the way down to 27.90. And I think it's setting up again, but you don't short it until that line breaks. Now, Circle, this is kind of an interesting one because I'm in the inverse. This is a totally unofficial trade. Didn't tell anybody about this, but I just kind of wanted to experiment with this. When it broke through this trend line, I bought the inverse 2x version of Circle, and it's been paying since. I don't know how much more it will pay, but this is clearly a very downtrending stock, very much out of favor with the market, very much bloated in terms of valuation, if it has any. and it has broken the support line underneath the moving averages, and that's just shorting stock 101. Okay, SOUN is a little different setup because this is a double bottom, and you don't buy it. I mean, you don't short a double bottom until it confirms to the downside. The nice thing about this is that you would have a tight stop just above that line. You might get, you might get in 20 cents below the line, and you put your stop loss 20 cents or 30 cents above the line, and then you've got a pretty tight risk that you're taking with lots of downside below, because it looks like this one is probably going to fall. Yeah, your lows are way down here, 650, and it's up here at 1050 right now. So that's a big fall. We wouldn't want to hold this over earnings, but I suspect earnings will not be good. They weren't good here. They weren't good there, but then the market liked it for whatever reason. So I wouldn't hold over earnings. NBIS and CIFR and CLSK and QBTS. These are all in the, they're not in the same space, but they're all in this kind of AI, DC, quantum computing, QC, infrastructure space, energy demand space. And they had their heyday. They came way, way down, and they've had this weak rally ever since. And now they're starting to break the support line of that rally. You can see it very easily on QBTS. This is a shortable candidate. You could go short right here, as far as I'm concerned, because you have broken, and the volume balance is very bad. CLSK, so this one is just about ready to break this little support trend line. And I'm not sure that would be, everything else matches, right? So you've got the big uptrend and the way big downtrend, and that's a pretty strong rally, not a weak rally. And then you've got a strong fall off. Now you've got the weak rally, lower high, but just not showing us the shorting yet. And the volume balance is pretty strong. And your long-term cycle is down at the bottom, rolling higher. So that would probably not be the best candidate. Let's take a look at NBIS. Yeah, it's not a candidate yet, but this is the setup, right? All-time high up here, slam down, lower high, lower low, lower high, lower low. Okay, this is the exception, a little bit of a higher high. So that's one red flag, but the volume balance down here is leaning bearish. MACD is just about to give us a sell signal. Stochastics already have given us a sell signal. Cycles are mixed, but you've got the big one down at the bottom, flat and rolling higher. So that's a red flag also. But regardless, it's not a short just yet until it closes below that line. Okay, last thing I want to do, 240. All right, guys, if you want to type in over in, oh, we've got a big rally going on here. What's going on? Must have been something that Trump said. Yeah. All right. Well, anyway, going to be a weird market. If you want to type in some ticker symbols over in the trading main room, and I'll take a look at those while I wait for those. I'm going to go over to FinViz, and I'm going to show you how to make a very simple screen for finding the best trading stocks in the market. Okay, very simple. You can alter this however you want. You go to the screener, let's click all, and hopefully I can find these easily. We go first to average volume. Let's do over 500,000. Okay, that's number one. Number two, price. I really want to set a range for price. Like over $10 is good, but under $100 is also good. And I can't really do that unless I have some kind of I can do 10 to 50. All right, let's do 10 to 50. Okay, let's try that. And then the last thing I put on is the only other thing is beta. I go over here to beta, and I want a beta value over 2. Okay, and that gives me 128 stocks. Now, we have to whittle these down a little bit. So I'm going to go over to, where is this at? Technical? Yeah, technical gives me the beta category, and I'm going to sort these by highest to lowest beta. There we go. Wow, look at this. UMAC is up at 21.8. That means it's 21.8 times as volatile as the S&P 500. I don't know what's going on there, but that looks really wild. We've got some of these are like Robinhood. This is a 2x version of the hood stock. I wouldn't trade the 2x version. I wouldn't chart that, but I would chart the HOOD. And then if you like it, you go and find your Robin and trade that one. ETHT is a ether, right? Ultra ether. Yeah, a lot of these are the 2x versions. I think we can weed out. Can we weed out, say, no ETFs? Maybe. Stocks only. There we go. Okay, 93. All right. So now we only have stocks. We still have UMAC up there, APLD. These are famous stocks because we trade these a lot. NNE, Coors, Destiny Tech. I don't really know that one. Pony, right? We've traded that before. Chinese internet play. PGY is a software. We've been in that one a few times. Here's Mara. Riot should be nearby. Trump Media, Galaxy Digital, Wolf. That's a like a Bitcoin mining play, I think, trying to become something else. I like a lot of them. Here's Riot. CLSK. Here's a quantum computing play. All right, so you find the most volatile stocks in the market that are also liquid because you have at least 500,000 shares and are not too high in price. Nothing wrong with stocks that are high in price. It's just that the sweet spot for consistent returns in the market, I've said this many times, between $20 a share and $50 a share. You get the greatest movement with these lower price stocks as opposed to something that's $500 a share, right? Or $1,000 a share. You get greater movement, but you're not trading the penny stocks or the sub $10 stocks, which can be really kind of erratic and maybe you're taking on too much risk. 20 to 50 is your sweet spot, but sometimes you don't get a whole lot of stocks in that space. So you go up a little bit, maybe to 75 or 80, or you go down a little bit to 10. I wouldn't go below 10. And anyway, you just put these into a watch list, and then if we take a look at some of the charts, we can kind of see how they're doing. Let's go to basic, right? So UMAC looks like it's falling off of the highs after a breakout, but that's probably not a short. APLD looks like it's printing a nice little looking bull flag. That's bullish. That could be setting up for a nice move higher. NNE looks bearish, right? It's downtrending. It's come up against a resistance line. It's rolling over today. Coors could be bullish or bearish, not kind of neutral on that one. I don't know that stock. Pony doesn't look too bad. I mean, this is a weak uptrend. It's the kind of thing I was talking about before. If you were to put a support line under that and then go short on the breakdown of that, then you would have a legitimate short setup. I'm not sure it's there yet. This one looks ugly. And this one is, a lot of these guys, a lot of these very volatile stocks are in this sort of weak mode right now. Like the market's not really sure whether this is a legitimate company with a future or not. BKKT looks ugly. So does Mara look ugly. And trying to look for something kind of a little more bullish. Look at that one, INBS. All right, Galaxy's not too bad because you did break out above that pivot high, and it was a gap up on something, news, I assume. Lots of good volume coming in, and it's starting to form a little bit of a bull flag, so Galaxy's not horrible. Wolf is up near the highs of the year. That's a good sign. And then what else? We've got Riot. All right. Oh, this is a good one. AAOI. In fact, I know this one because it triggered an alpha gold alert in Black Box Stocks a few days ago. It wasn't this week. It was last week, I think. And I put it on my greens list, but I haven't done anything with it just yet. It's got very good growth. This is like a fiber optics play, and it's got data center potential, something like that. I'm not exactly sure who their customers are, but look at these growth numbers, very, very good. And it's not profitable yet, but it's not a huge loss, or it's not like in the billions. It's just 155 million. So they're getting there, projected to be profitable next year. A lot of the other numbers are kind of ugly, but you go over here, short interest, 12 what's the percentage here? Short ratio is 19%. That's pretty heavy, right? Anything over 20% is really heavy, and 30% is like extremely heavy. And what does that mean? It just means a lot of people are holding shares short of this stock. They might be doing that for very good reason, but that also means that when it gets up above some of these highs, when it gets up above 40, those guys are probably going to start closing their short positions. They don't want to take a loss, or they don't want to take a big loss. And as they're buying back shares, and the shorts of the short stops are getting triggered, then usually get a nice squeeze move higher. Okay, like this is a squeeze move right there. Nice big squeeze move. So I like this enough to put it on my greens list. I think it's already there. It's on the list downstairs. All right. So let's see what you guys are interested in. Okay. Well, I don't see any LAU. All right. That's the only ticker symbol I see. And I'm kind of anxious to get back in the room now that the market's doing something. I have to figure out what it's doing. I've been out of the loop for the last hour and a half. All right, LEU. So this is in the nuclear power space, which is a good space, right? You've got UUUU in there. You've got the CCJ, the mining stock for uranium. The price of uranium has been pretty stable, I think. I haven't really looked at it. Let's just take a quick look, because that can affect margins and so on. Yeah, it's been good, right? And I said somewhere, I think it was in one of the rooms this morning, that of the nuclear plays, you've got Oklo, you've got SMR, I think is the ticker symbol. You've got UUUUU. And this is the one that I like the best in terms of forward growth potential, good analyst review. And it's got a pretty good chart. Now, this is a bullish setup, right? The rounded bottom, always good, always bullish, rounded bottom with a little handle off of this. Is this a significant neckline? Oh, you always want to see. So if it's getting stuck up here at these highs, did it get stuck in the past? And then what happened? Well, yeah, it was a resistance here, and then it broke out, came back down. It was support, bounced, came back down, held, and then it broke through again. So I would say that the next move regarding this line is going to be a breakout above it, because it's been above it a fair bit recently, and the last move that we had was a breakdown. So it's kind of, yeah. Now, I don't like what it's doing today. So it did get way above, in fact, printed on an intraday basis, like a 2.5, 3 month high, and couldn't hold it, got slammed all the way back down. So that typically means that sellers are still in control of this particular stock. They've got really heavy volume coming in. So those are probably some new shorts or some guys that were panic selling their profits if they had any. So weak hands, right? Guys that bought down here and maybe, I need to take my 50 cents off the table, and they do that. But here's one good thing that I do like. I don't like the big red stick, but it did tag the 21. You can see that if I zoom in a little bit. Hey, where did my 21 go? I just deleted it. I don't believe I did that. Oh, well, I'll have to put it back on manually. So it did come down and tag the 21, and it bounced up off the lows. And yeah, so the dominant pattern here is cup and handle. The trick with cup and handles is that you really shouldn't buy it until it closes above the neckline. It hasn't done that yet. But another trick that you can do, and I kind of like to do this myself, and that is find the pullback like this one, find the dips down to support where they hold, and maybe we can look at the 1 hour chart and see if that's happening on, yeah, it's happening on the intraday basis. So here's your reversal bar. Actually looks pretty good. So if you're not in already, you can nibble at this point, maybe add a little bit as it goes up, and then your big breakout above 330 is going to be the one that you want to hang on to for a while. Okay, I'll do a couple more. Soon we did already, and it was a bearish setup. I mean, it's down at a double bottom, and it's just kind of sitting there on that double bottom. And I didn't check whether there's bullish or bearish divergence there, or bullish divergence or not, no divergence. And my read on it was that if that line breaks and it closes below that line, it's a short. It's probably not going to be a long for a while. But if you just bought today, you're at a double bottom. It will probably hold, especially if there's bullish divergence, and maybe you can get a little bit of a bump. But beware of the bump and fail. That happens a lot down there at I think it's 52-week lows. It's down there pretty far. TSM has had great. Let's get back to the daily chart. Great earnings. Lots of excitement about TSM. If China is also kept in check, TSM, the Taiwanese company, is a good place to be. And yeah, it looks kind of like yesterday it did break through that support low, but it's back up above it today after flushing out below the low of that day. That's a good sign. I think TSM is just going to be, it's really a buy and hold kind of stock. It's not really a trading stock, although we have traded it calls mostly. When you get down here into the pink zone with a great company like this, buy it. When it's up here near 52-week highs, especially the earnings are already out of the way, and now it doesn't really have much of a catalyst to look forward to, it gets a little trickier. But if you are long already and you're looking for like a really good solid investment that's probably going to return 100% over the next 2 or 3 years, then this is a good one to be in. Very good one to be in. It is the king of the AI chip making space. Okay. Yeah, BE got an alpha gold alert today, which is always a good sign. It is kind of extended. Today's red bar, not such a good thing, but the bullish volume going in, this is a good sign. And it has broken out. That was already done, that breakout. This is your 52-week high breakout right here. And you're above, you're holding that line very nicely. Ideally, it would be great if you could just wait for it to come back down to that line again and then buy it. But if you're long, hold and roll up your stop. If you're not long looking to get in, I would say, yeah, you can buy it here. Not bad at all. No idea what it's going to do on earnings. It was a big up the last time it reported, and it looks like it was pretty flat. I mean, it would gap down the next day, but then right back up again. So earnings might not be, especially if earnings on energy plays and commodity plays tend to be not such a big deal, right? As opposed to one of the big Mag 7s, because they have to come out with all kinds of reports. But if it's a commodity play, well, we sort of already know what the value of the commodity is already. And if it's an energy play, we sort of know what the value of their energy products is. And so there's kind of a lot already known. All right, I do like this one. And as I said, call buyers were very active today on the Alpha Gold alert, and that's always a good sign. All right, I'll do one more here, IBM. Okay, yeah, so this is a good looking chart. You had a big gap down on earnings. There's probably a total mistake of the market because it went right back up. I assume that's all-time highs. That must be all-time highs. IBM has really upped its game. I have a long story about IBM. The time I graduated from high school, I was given one share of IBM from an uncle who worked for IBM. And I sold the share the next year. It was like $700, and I bought myself a top-of-the-line stereo. Back then, it was a lot of money. If I had held that one share, and with all the splits and everything, and where it is now, it wouldn't be $300. It would be a lot more than that. I don't know, maybe $20,000, $30,000, $40,000, something like that. Okay, yeah. So this is a bullish setup. You've got the double bottom off of a soft pullback. You've got the inside day bar. You're at the uptrending pink zone of the LRC. That's always a good place to be. The cycle's not quite where you would want them. The stochastic's not exactly signaling a fresh breakout move or a fresh up move. Little bit of distribution yesterday on the big red stick. That's problematic potentially. So I'm just pointing out some of these little things that will mean that it probably is just not going to go crazy up for a little while. And you've got earnings coming up. I'm not so sure I'd be holding over earnings. Yeah, but it looks good. I mean, it's a very good chart. It's bullish. It's uptrending. It's at support. And those are the main things that you want to see. All right, guys, I better go. let's get back to the market. I have no idea what's going on here, but something is really rallying the market, and I need to find out. God bless. If anyone has an explanation, you can type it in the main room. Save me some time. See you back in the room in just a little bit. Bye for now.